Candle Range Theory Trader back with you in another video talking about what you should see when you come to the charts. So this is for anyone who might start each trading day and might suffer from something known as analysis paralysis. They're just not sure what they're looking for. They can't make heads or tails of what they're looking for. This is for you. So it is necessary to know which pairs to watch and which pairs to ignore when you're trading. There will be times you'll come to the chart and the move has already happened. You have missed it. There's nothing you can do. There'll be times you'll come to the chart where it's just going to consolidate all day. We want to look at the most highest probability trades or pairs and just follow those, because as it says down here at the bottom, most days, most pairs are not worth trading. Okay? Most pairs are not worth trading on most days. No different than like a baseball player who gets thrown a pitch. Most pitches are not worth swinging at. All right, you just have to be patient and know what you're looking for. So this presentation is going to be a quiz for you to see which pairs you should watch and which pairs you should ignore. So we're going to have a little fun today. It's not going to show the results of the chart, as the results do not matter. Now you might say, what do you mean the results don't matter? I'm trading to try to make money. This is a mental exercise to help you train your brain to know which pairs to look for. The entry is actually the easiest part, where some people do is they'll force a trade and they're trading pairs they should have ignored to begin with. So this is going to deal with that. Now, what you want to see when you come to the chart depends on the model that you trade. All of the models here, they'll be in the links to the descriptions. We're going to go over 3 separate models: the 3x3 London model, the 4x4 New York model, and the 5x9 New York model. Okay, so those will be the 3 models that we'll explore. So let's review the finished setup as a refresher. This is a 3x3. Okay, when you come to the chart at 5 a.m. Eastern Standard Time, okay, and wherever you are, you just have to convert that to wherever you are across the world. Use the Google, okay, but I'm on the East Coast, so at 5 a.m. Eastern Standard Time, I'm only looking for one thing: 3 candles that are the same color that constantly cut and make either new lows or new highs. Okay, so by the time the chart finishes, I want to see something that resembles this right here. This is the whole completed move right here. But we're going to act like this green candle and this green candle don't exist. Okay, so what am I looking for at 5 a.m.? 1, 2, 3. That's it. That right there. Okay, now for our 4x4, what we're looking for is we come to the chart at 9 a.m. Eastern Standard Time, and we want to see 1, 2, 3, 4 candles, normally all the same color. However, there is grace here where if one of the candles is different, if there's one green in here, like a green doji or something, that's forgivable. Or if there were 3 green candles and 1 red doji, that'll be forgivable. And we also have to remember as well that when we come to the chart, notice here the price should be at the low, near or at the low of the day. Price should be at or near the low of the day. Right here, this last red candle. That's the best odds to give us a new low and then a slight retracement. All right, that's what we're looking for. So that's the New York session here. This is London right here. All right, as you can see, this move wasn't as big, but this is the price action. You cannot predict how far price is going to go, so take what you can get. So we're going to pretend like you're coming at the chart every day at 5 a.m. and you're looking for 3x3. So what I'm going to do is when I show you the picture, I'm going to have 7 seconds. You have 7 seconds to decide if this is a pair you should be watching or not. And if you want to just pause the video to look at it, do that. All right, so here we go. First one. Let's begin. This is every day, 5 a.m. Should we watch this pair? I'm going to count 7 silently. Okay, so should we watch this pair? No. Why not? Because the move's pretty much already happened. All right, 1, 2, and then in the 1 o'clock hour, price swept the low. This would have been the candle range right here. Okay, price swept the low and closed all the way up here. All right, this does not fit the 3x3 model. There are 2 little red candles here and a big old green one here. Now, if you were trading in the 1 o'clock hour, fine. But no, at 5 o'clock, this is where price closed. It's already at the high of the day. It could keep going. It could retrace some. We don't know. But this is not our move. This is not our pair. We do not watch that. Okay, so next one. 7 seconds. Here we go. Okay, so should we watch this pair for today? No. Why not? Because, again, green, red, green. When you come to the chart at 5 a.m., the price closed right here. The high of the day was all the way over here. Low of the day is over here. I want to see price at 5 a.m. at or near the high or low of the day. It's in the middle. I don't know what price is going to do, nor am I going to try to figure it out. That's a no. Next pair. Should we watch this pair? 7 seconds. Okay, so should we watch this pair? Yes. Why? Because we have 1, 2, 3. So when I come to the chart at 3 a.m., sorry, at 5 a.m., what I want to see is price go open at 5 a.m., go below this low, and then start to go up. Now, can it open and then just go straight up and not sweep this low? Yes, it can. All right, so be prepared for that too. If that happens, that's still not our setup. We want to see this low get swept and then price go up. Okay, I anticipate a new low to be made starting at 5 through 9 for the London session trade setup. All right, but yes, this is one that you watch. Next one, here we go. All right, so should we watch this pair? No, why not? Once again, price is in the middle. Okay, we got the high here, the low here. It's pretty much just spike both ways. Based on the way I trade, I do not know what price is going to do. It could go down and take this low. It can go up and take this high. It's in the middle of the daily range, more or less. I have no clue what price is going to do. I skip it. Next, should we watch this pair? 7 seconds. Okay, yes, obviously. Okay, because once again, 1, 2, 3 candles. This is all I'm looking for. All right. This is very close to the current low of day. So it wouldn't be, it's not a big stretch for price to go down, sweep that low, and then possibly reverse. Will it do it? I don't know. But I'm going to start going long once it goes below the low and then closes back inside of that range or just creates the money candle either way. Okay, next, should we watch this pair? 7 seconds. All right, yes, we should watch this because we have 1, 2, 3 candles. Now, this has closed a bit of a way from the low of the day. Is it possible that this could be the low of the day and then price could just go straight up? Yes. But in order for me to take a trade, it has to create a new low. All right. And if I just miss it, I miss it. This may have been the best low right here. I don't know. But I start at 5. I don't try to trade 24/7. Okay, I really don't. Okay, next we're going to try the 4x4. So let's pretend now that you're coming to the chart at 9 a.m. Eastern Standard Time. Okay, so you're going to see 4 candles, but let's see which ones we should watch and which ones we should not. So first chart, should we watch this pair? No. Okay, why not? Once again, price is closed all the way up here. The low of day is here. I did not anticipate price coming back down to this low and then going up. Is it possible? Yes. But remember what I said about the doji? If there's one green candle, that's fine. But you want to see that green candle like back here during Asia. Like if this was green and then this was red and another red, that's forgivable. Something like this, the low of day already could possibly be made and price could just continue up. I'm not going to try to guess it because we like to be in close to the low or high of the day. All right, so this is one I would not watch. Okay, next. Shall we watch this pair? 7 seconds. Okay, yes, this is a resounding yes. I love what I'm seeing here because price is closed close to the low. Okay, you got 4 red candles, perfect all the way down. It will stand to reason that price could possibly create a new low. Okay, starting at 9 a.m. through about 1 p.m. and then reverse and possibly come up some. Okay, so yes, this is 100% what we would be watching. Okay, next. Okay, should we watch this pair? No, why not? Okay, price is right here. Okay, now you may be thinking, well, what if price sweeps this high and comes down? That's not what I'm looking for. I want to see 4 green candles stacked on top of each other. That's going to give me the highest odds of a possible pullback, not this up and then down and then up again. All right. The best trade simply based on the candle range theory would have been to take this high, take a long right here below this candle's low and then sweep up. but there's no system for that. So that's not what we're doing. Okay, that's not the setup we're looking for. So don't try to make something out of nothing. We're not trading this price action. This is not us. All right. Now, the last model is going to be the 5-9 model. This is a very popular model that people seem to love. And the thing is, it's a 2-candle pattern. So you really can't mess this up. So let's refresh our mentality on this and understand how it looks. You're only looking at one candle, the 5 a.m. candle mod, 4-hour candle. Doesn't matter well, of course, the nicer size range is bigger or better to trade. However, all you're going to do is mark the high and the low of the 5 a.m. candle. If price sweeps the high and then closes back inside of it, you go short. If price sweeps the low of the 5 a.m. candle and closes back inside of it, you go long. All right. But again, you are not allowed to trade until price closes back inside this candle's range, the 5 a.m. range. All right. So that's how so this is a short example. So if you come to the chart at 9 a.m. and see this type of price action here, price opened here on this black candle, it went up, and then as soon as it closes below, see where that red line is, the high of the candle, your goal is to catch this price move down, and then it closed right here. All right. So your goal is to just catch this downward price action and catch that momentum. And ideally, you want to be out by 1 p.m. Ideally. So that's the hope. All right. So let's take a look. Now you come to the chart at this example at 9 a.m. There was no way I could crop out the prior candle to this one, the 1 a.m. candle, but we're only looking at one, and I'll point to it so you know. So here we go. Just look at the last printed candle. Now I'm going to help you out with this one because I don't think I mentioned it on the 5-9 model, but let me make this clear as well. If this is the 5 a.m. candle, this point right here has to be the current high of day. Let me throw that in there too. You don't mark every single 5 a.m. candle. The catch is this point right here has to be the current high of day. And then between 9 and 1, a new high of day has to be created and their price close inside of it. So you don't mark every single 5 a.m. candle. So we're looking for high of day and low of day. All right, so here we go. So should we trotch this pair? I'm going to go ahead and just say yes. Why? Because this is the 5 a.m. candle. The low of day is right here. So in order to trade this, I would want to see price go below the low, close inside of it, and then go up. And that's it. All right. So now I'm going to just let you do the next one on your own. 7 seconds. Look at the last printed candle. Ignore this red one, this green one. This is the 5 a.m. candle. Should we watch this pair? 7 seconds. Okay, so for this one, no, why not? Because this 5 a.m. candle did not make the high or low of the day. It was made by this candle. Okay, so we don't trade this. Okay, we don't trade it. Next, last printed candle right here. This doji. Hard to see. Prices didn't even move. This is the high. This is the low. Should we watch this pair? 7 seconds. Okay, yes. Why? This 5 a.m. candle made the low of the day. So I want to see price go down, create a new low, and once it closes back inside the candle's range, continue up to the candle's high. The candle's high is the take profit if you're trading the 5-9 system. Okay, that's that. Last printed candle, this green one right here. Ignore this. This candle is not a factor. We're only trading off one candle's range. Should we trade or watch this candle? 7 seconds. Okay, yes, this is one that we trade. Right, because this 5 a.m. candle made a high of the day. So we want to see price open, go above, create a new high, and then go down. And that's it. That's all. Okay. But this is the main test. High of day or low of day on the 5 a.m. candle. So in conclusion, the results do not matter. All right. Once you see what you want to see, and then you take your entry, then you just get in. All right. You're 50% of the way there when you learn to identify pairs. But what a lot of people do is they'll try to trade stuff like this and try to force it. Well, maybe it'll break this high and then come back down. That's not the 5-9. Okay. Don't force a trade. If it's not there, it's not there. Stick with these and stuff like this. Okay. Don't make up stuff. So when you learn to identify the pairs that are worth watching and ignore all the other ones, you're miles ahead of most traders. Okay. It's no different than a basketball player that's just shooting into the goal. The goal is not going to change. All you're doing is just shooting the same ball into the same hoop over and over and over. As a trader, you're just looking for the same chart pattern at the same time of day over and over and over, and that's it. Okay, that makes your job so much easier. Now you can also set price alerts to minimize screen time. And as far as entries go, you can look at the video how to catch the best CRT entries if you want to learn more about that. But this video was not about entries. It was more about building your watch list to know which pairs do I watch and which pairs do I ignore for the day. You'll find at least one of these setups in a day, I promise. But it occurs every single day. Now you might only see one. Sometimes you might see seven. But I watch all the majors and crosses. There's at least one a day. Do I catch them? Do I catch them all? No. Do I take losses? Yes. But I see this type of price action every single day. Okay? Every single day. Now, stick to the first part of your model and don't be surprised if the setup doesn't play out. Some days it will, some days it won't. You cannot predict the price. You can only react to what it's doing. Let the market reveal its hand, and then you act on based on what you see. Okay? So the days that do play out, though, you got to make them count. So keep your losses small and your wins big, because risk management is still number one. If I don't harp on anything else, it's risk management. That's what's going to get you paid. I will say it over and over as long as I trade. Okay, trading does not make you money. Risk management is what makes you money. That's what's going to write your paycheck, not taking all these trades. Okay, so I hope that helped. That is what you want to look for when you're taking these trades. You might want to, if you want to build a screenshot library of your own, take screenshots of this presentation. That's fine. Just remind yourself, okay, if I trade the 5-9 pattern, this is what I look for. If I trade the 3x3 pattern, I'm looking for, well, that's 4x4. If I trade the 4x4 system, I'm looking for something like this. Of course, if you're going short, it'll be 4 green candles. All right. And then if I trade the 3x3 for London, I'm looking for something like this or something like this. All right. Low of day. When price closes near the low of day at 5 a.m. Eastern Standard, just wait for that new low. Try to catch the close above the money candle. You're in there. All right. But it starts here. It starts here, and then that way, and just ignore this, ignore that. All right, those aren't your pairs. Okay, that's weird price action. We don't trade that. We want to trade what's easy. These patterns are easy to see and spot. A child could spot these. Okay, so, but this right here, that's not what I'm interested in. Okay, so I appreciate you watching. Thank you for your time and attention, and have a great rest of your day.